New York Representative Ritchie Torres is also a member of the Financial Services Committee. Congressman, welcome back to the show. We always love talking to you. I know it's been a busy day for you yesterday. We appreciate your time. What are your biggest takeaways from this hearing?
Look, we have so much to learn. The purpose of the hearing was to ascertain what are the facts, what are the larger policy questions surrounding the GameStop short squeeze. Members had questions about payment for order flow, execution quality, clearinghouses, and the gamification of online trading. And the most important takeaway is that the market is not the level playing field that it should be. Retail investors lack the information necessary for evaluating which brokerage firms offer them the best execution.
In your opinion, Representative, do you think Congress has a better understanding of what went on amid the GameStop saga after the hearing yesterday?
We do. We went beyond the sensational David versus Goliath narrative and came to understand the complexities of the stock market, the role of clearinghouses, the role of the relationship between trading firms and brokerage firms. And I have a particular concern about the perverse incentives built into payment for order flow. Payment for order flow creates a perverse incentive for brokerage firms like Robinhood to send orders not to the trading firms that will offer the best execution to retail investors, but rather to the trading firms that offer the best payment to brokers like Robinhood. And that concern is not purely theoretical. That has been vindicated by the actual conduct of Robinhood. The SEC found that Robinhood misled its customers about how it makes its money. And both FINRA and the SEC have found that Robinhood failed to ensure the best execution for their customers, depriving those customers of $34 million and resulting in a $65 million civil penalty from SEC. So we need to take a close look at payment for order flow and the conflicts of interest that it might create.
Congressman, as you well know, this is a story you follow very closely on Cheddar. And again, we love talking to you about this because we're watching this yesterday. And yes, under your questioning, the CEO of Robinhood revealed its underlying business flow, as you just alluded to. More than half of Robinhood's revenue is derived from payment of that order flow, like you mentioned. So does this call into question the idea of free trading when it comes to this platform?
Look, the overwhelming majority of Robinhood's revenue comes from payment for order flow. And the overwhelming majority of Robinhood's order flow revenue comes from one company, Citadel. So it does raise questions. Robinhood will claim that we're providing retail investors with free trading, but nothing in life is ever free. Everything has a cost. And even though there's no price at the front end of the transaction, there must be a hidden cost to retail investors at the back end of the transaction. And the question is, what is that hidden cost? And there's no transparency for retail investors, and that is the problem.
Robinhood CEO Vlad Tenev said there was no way anyone could have predicted this January trading frenzy. Do you agree, sir?
There were signs of volatility even before then, but there's a contradiction here. Robinhood claims to be on a mission to democratize trading. You cannot democratize trading when you impose restrictions on retail customers, right? The CEO has an obligation to see to it that his company has enough liquidity to ensure that retail investors can trade freely. And he failed to do so during the GameStop short squeeze, and that's why he had to apologize publicly yesterday before Congress.
We heard Chairwoman Maxine Waters saying there will be additional hearings when it comes to this issue. Are there any policy remedies, Congressman, that you saw that may have been suggested so far that you're partial to as Congress moves forward on this?
Look, as the chairperson said, this is the first in what will likely be a series of hearings. The purpose of these hearings is fact-finding and deeper understanding. We want to be careful not to rush to regulate without first understanding the complex plumbing of the stock market. Having said that, there's a powerful case to be made for greater transparency. Retail investors have a right to know which brokerage firms, which electronic trading firms offer them the best price, the best execution.
Were there any other issues you hope would have gotten more attention during this hearing, Congressman Torres?
Look, I wish we were able to explore all of these issues in greater depth. I did express concerns about the gamification of online trading, in particular options trading, which is dangerous for new investors. Robinhood's app has a feature that encourages customers to tap on the app up to 1,000 times in order to improve their position on a waiting list for a cash management feature. As far as I'm concerned, encouraging customers to tap on your app 1,000 times means encouraging addiction. And I worry that the real world impact of Robinhood is the democratization of financial addiction.
Representative Ritchie Torres, we always appreciate your time, sir. Again, especially after such a busy day for you, Democrat of New York and member of the Financial Services Committee. Thank you again, Congressman.